Welcome to Animal Spirits with Michael and Ben. You saw the Robert.
Starting the show off with a sigh.
Yeah, I don't know. So,
an exhale.
So I feel like if you're someone who is not very well read, and I certainly wasn't coming out of high school, college.
Elitist alert, elitist alert.
No, but then you start reading, and the first few books that you... Why is that elitist? That's like the opposite of elitist. I was an idiot.
For those of you who aren't as well read. All right, go on.
So the first time you read a book that kind of explains the world, whether it's history or markets or whatever it is, you feel like, oh, you just unlocked a key, this secret door, and now you're the smartest person in the world because you understand. And then you realize, wait a minute, there's so many people that already knew this, and then there's a million books that are just like this. So for me, I can't remember what the exact books were that did this for investing, but I know for a lot of people, it's Rich Dad, Poor Dad. That one sort of unlocks a lot of people, especially young people, to go, oh, light bulb moment, right?
I'm pretty sure that I read that. I'm pretty sure my dad gave that to me when I was like 17 or 19 or who knows what age.
Yeah, and then you...
Probably the first book I read.
Use it as a doorstop. So for a lot of people, it's a light bulb moment. For me, I think the reason that book never resonated with me is because I knew this guy is telling a story and he's using quotes, and I'm going, well, he doesn't remember exactly what these people said. So it's obviously he's telling a story to drive a point across. I mean, what he writes about didn't really happen. Let's be honest, right?
Honestly, I have no recollection of the book or what you're talking about, but it sounds like you were reading with a very critical lens at a young age. So
if I it's kind of like watching a movie that's based on a true story and they fudge the whole true story and you read about what the actual true story is. You go, oh, it's kind of similar, but not.
You know
really.
what? Let me turn the tables. I don't believe you. I don't believe you.
What do you mean?
There's no way that you read Rich Dad Poor Dad and as a noob whale and said this guy's full of shit. It's a compelling read for a young.
No, because if he's talking about a story from 30 years ago and he's using exact quotes, that's what gives me. It's like you don't remember exactly what someone said to you 30 years ago, quote word for word.
All right, let me ask you this.
To me
did you revisit the book for this podcast, or do you actually remember this?
No, I actually remember this because I remember a lot of people. This was like here's what I did when I was younger. I Googled best finance books or best investing books, and I tried to go through the list.
Up, so did I. Who didn't? Yeah.
And that book, Rich Dad, Poor Dad, was always on the list. So eventually, after I went through my list, I have to read this book. It's on every list. So you knew you discarded Robert Kiyosaki before he started going crazy. Not really. Obviously, the whole point of the book, like, oh, okay, that makes sense. But the method in which he told the story, which I understand because guess what? Storytelling is an effective way to get people to learn about complex topics like finance.
All right, so why are we even talking about Robert Kiyosaki, the author of Rich Dad Poor Dad? One of the best financial selling books of all time.
Yes, I'm sure millions of books, and he turned that millions of books into probably thousands of seminars and newsletter subscriptions, and I don't even know what exactly he does. But
what's this guy's net worth? A few $100 million?
I'm sure he's worth a lot. So. Yeah. But that's the point. So he tweeted this weekend, giant stock market crash coming in October. Why? Treasury and Fed short of T-bills. Gold, silver, Bitcoin may crash too. Cash best for picking up bargains after crash. Not selling gold, silver, Bitcoin yet. Have lots of cash for life after stock market crash. Stock's dangerous, careful. And
wait. Have lots of cash for life after stock market crash? Even this tweet is horribly worded.
Yes, it's worded.
It's a horrible message, and it's offensive to the English language.
So. This one got picked up on FinTwit pretty quickly, and Cullen Roche sent me his history of tweets going back to like 2011, saying that like this is the world's biggest crash is coming, and this guy's been predicting crash.
He does this
for
all the
years
time.
And years and years,
all the time.
I found one from 2017 talking about making a crash in MarketWatch, and he said he's not concerned about the professional investor who can go short. It's the person with a 401k, their IRA. This guy's been trying to scare people out of the market for years. And if his personal portfolio was really positioned for this world-ending crash, he's not doing so well. The point is, personally, he's probably not positioned for a world-ending crash, right? He talks a big game, and I guess the thing that annoys me about stuff like this is this guy obviously has a big audience. He has like 1.7 million Twitter followers. There are people, young people especially, who are impressionable, who have read his book and probably hang on his every word because they enjoyed the book. And I think this book should now come with a warning label. The author is a charlatan.
Yes.
Right? Like,
I mean, I don't love throwing that word around, but like
I feel pretty.
Yeah, no, this guy, he's so far over the line that
Like,
I don't know what else to say.
The problem is when you have predictions like this and you already have made a bunch of money and you've sold millions of books and you know people are going to listen to you regardless, there's no consequences for your actions. If he was actually managing money for people, like there would be some consequences, but he's not. He's just he's a talker.
A few years ago, I think this is 2017, I took a picture of the personal finance section in Barnes & Noble. You got Tony Robbins, you got Rich Dad Poor Dad, all these, a whole bunch of books. Somebody tweeted to me, isn't Kiyosaki in jail with Tony Robbins as his next cellmate? Kiyosaki responded, nope. In 2000, here's a quote.
That's actually a pretty good response.
Here's a quote from 2016. I love gold. I was buying gold at $70 an ounce. I'm a gold bug. On the other side, there's this guy named Harry Dent, a very smart guy who says gold is going to drop to $250 an ounce. Another very smart guy, James Rickards, the author of Currency Wars, says gold is going to go up to $10,000 an ounce. So somewhere in between is your reality. All right, that's fair. Somewhere between $70 and $10,000 an ounce.
Look, I don't have a problem with people saying markets are going to crash because that's true. Markets are going to crash at some point. I have a problem with people saying markets are going to crash tomorrow or next week and giving a date and then saying this is the biggest crash in world history is coming and just trying to scare people because I don't see the point of that. That is not helping anyone with anything. That's just stroking your own ego. And so that really annoys me, especially when you have a big audience like this.
Oh, it's horrible. It's truly disgusting because this person, I mean, this is dangerous. This is truly hazardous to people's financial well-being. And the thing is, like, what does he have to gain from this? He's been saying the same shit since 2011. What does he have to gain?
The only thing I can think of
is he going to say I told you so? Is it to sell more books? This guy's got more money than he could spend in 30 lifetimes. What is the
only
point?
thing I can think of is if you have this much money and I don't even think he does. I think if you have this much money in cachet, you probably think to yourself, I can't go back on my word now. I can't say I was wrong then. So I have to just dig in my heels. And you've seen a lot of people do that, where they just, instead of saying, you know what, geez, I probably should have rethought my position here. I've obviously been wrong. I think it's really hard for people to do that, especially when they're successful.
Why? You know why? It's very simple. The only thing worse than being wrong about a trend the entire way is being wrong again at the top or the bottom. And capitulating and saying, you know what, hand up. I've been bashed for 10 years. My bad, guys. I was wrong.
This is
and then the market crashes. Like,
yes, you're in the wrong both ways. Yeah, I agree.
So that's why it's psychologically or emotionally, you're not going to do that to yourself.
Hey, so remember the Evergrande story? That was like the biggest story in markets for a day.
I do.
Can I take a victory lap on that yet? I got a lot of hate emails saying, Ben, you're not paying a big enough attention to this. Ben is poo-pooing this.
No, I don't think you can. I think that you were right in the sense that we overreact to most stories. But if you're just like not going to pay attention to the news, you'd be like, this is a joke. Then what's the point of even doing?
That's not what I was saying, though.
What's the point of doing content? If you're not going to go ahead.
Because I will tell you when I'm worried about something. When the pandemic broke out, I was worried about that. Right, but I thought this one seems like a non-story. That's all I'm saying. But here's what I think a lot of people are missing.
Hold on. But it's not a non-story. It's the biggest property developer in the second biggest economy in the world going bankrupt. I don't even know what sort of fairy dust you're smoking to say it's not a story.
Because here's what everyone's missing on this story. When Lehman Brothers happened, everyone keeps saying.
By the way, kudos to you. I don't correcting your mispronunciation.
Hey, you cannot make fun of someone.
You're a big man.
Hey, don't make fun of someone for mispronouncing a word because it means they learned it by reading. So there you go. Everything
that's
gets
Morgan House special. That's Morgan House special, by the way. Shout out to Morgan.
I heard that at like my daughter's daycare a long time ago. I think.
Well, they were quoting Morgan.
Okay.
Actually, Morgan was quoting J.K. Rowling, or did she retweet? I can't remember. Either way,
it's an old quote. That's like a Mark Twain thing. Like someone attributed it to Mark Twain or whatever.
Damn, so now I'm misattributing quotes to misattributing. Now I'm part of the problem.
Yes. You really thought Morgan came up with that? I mean, Morgan's a smart guy, but that's like a really old quote.
Excuse me. If Morgan, shame on Morgan now. If he tweeted it, you gotta put it in a quote. Or
I think his tweet said like, I heard this from someone. He wasn't claiming he came up with it.
Sorry.
Yeah. All right. So here's whatever misses from Lehman Brothers.
Go ahead.
The fact that happened means it's never going to happen again. And you can tell me I'm an idiot. No, here's the thing. Everything gets bailed out now because they saw what a debacle that was. So at that time, they said, you know what? We're going to let one of these go. So if
everything gets bailed out, nothing gets bailed out.
But if you really think that China wasn't going to step in and bail this company out, you're delusional. Right? Like I'm sorry, we've seen what happens when a huge company.
But we don't even know the details of the bailout yet. Who's getting paid back? Who's taking haircuts? And not everybody's being made whole.
Yeah, but it's gonna get. It's not. It's
you
not
know
gonna
this
be
if you were following
system.
if you were following the story, you'd have a better grasp on the story.
Okay, literally everyone stopped paying attention to this last week, and I'm sure you did too. Come on, you're pretending to care about this story. You don't really care.
No. I like 80% agree with you. I just think that you were too cavalier. That's all.
Yeah, and I was right for being cavalier. I'm just saying.
One of these days, the market's gonna crash, and I'm gonna side with Robert Kiyosaki, and we're gonna say I told you.
Listen,
so.
I'm not saying that that having this like the Fed put and all this stuff isn't going to lead to bigger problems down the line. Like it could. There's going to be unintended consequences. But I'm sorry, any huge interconnected company is going to get a bailout from now on. That's just the world we live in. And if you
have you ever heard of moral hazard?
If you don't think central bank, okay, who cares? Like, remember when markets were free? Guess what? Markets have never been free, ever.
Man,
I'm sorry that if you want to be one of these people that is constantly pushing conspiracy theories and relying on what happened in the past, if March 2020 didn't make you realize that this game has changed and central bankers will do everything in their power to keep the markets functioning, I don't know what else to tell you. Now, that doesn't take risk off the table. It just moves risk around a little bit. It shuffles the deck chairs.
Bob Klein from the Federal Reserve is resigning. Is this your audition? Pretty compelling. Pretty compelling.
Listen, here's the boring way of saying what I've said in the past is going to happen. If you remove the left tail from a lot of this stuff, returns are going to be lower going forward. So that's what we have to look forward to. Thanks a lot, Fed. That's where I come down to this. It's not like some grand conspiracy that the world is gonna be cut in half because the Fed is saving companies. It's that returns are gonna be lower going forward because markets are safer than they were in the past. I'm pretty confident in saying that.
Well, I guess no. That's fair. That's fair. But what's the left tail? Like a 70% decline? I think that's. Yeah, I don't want to say off the table, it can happen, but like the odds of a 70% decline are much lower today than they were, say, 50 years ago. I think that's reasonable.
Yeah. I think the Great Depression 85% crash in the U.S., save for Independence Day 3, I think that's been taken off the table.
Welcome to Earth.
I mean, we had the biggest quarterly drop in GDP ever in 2020, and the stock market fell 35%, 34%. Anyway,
that hand tap right there was a mic drop.
Sorry. All right. I'm getting back to my theory that every rich/famous person is a troll, even if they don't know it, just because there has to be something that comes from getting people on both sides either excited and outraged at the same time. So Cathie Wood, I guess, was at the Morningstar conference and she was debating Rob Arnott. And I think that someone asked her, what would you rather invest in over the next 10 years? The large cap companies as a whole in the U.S. or U.S. Treasuries? And her answer was U.S. Treasuries.
That's not serious.
Exactly. So she said because yields at 1.4, 1.5%, she's predicting deflation because technology is going to cause deflation. She says she thinks, I do really think the Treasury bond will do well because of deflation, not inflation. And I'm telling you, this is like a do they believe it, do they not? She is so good at this now, at trolling, whether she is trying to or not. I almost applaud her for this.
Can disruptive tech do well if large tech does worse than bonds that are yielding 1.2%?
By the way, she also said she expects her
Answer
fund
the question.
She said her fund expects to do 30% a year. I guess she's really hoping for the correlation of interest rates going down and tech going up.
mean,
it's
you never say never. I can't see a world. You know what? I'll say this is impossible. This cannot happen. It cannot happen that her fund does 30% a year for 10 years. First of all, her fund would get to $3 trillion about.
Yes.
If it did 30% a year. That cannot happen while at the same time large tech underperforms government bonds. That cannot happen. Would you agree?
Yes. Well,
she didn't
say...
There's no way in the world.
She didn't say large tech. She said large cap companies, but you're right. Tech is the biggest part of large cap. Yes.
Ipso facto, cannot happen.
Yes.
Are you taking this out of context? Did she really say that?
This is a story from AICIO. I'm quoting the exact story. So unless they're taking it out of context, I'm using actual quotes. She says, I do really think the Treasury bond will do well. She's predicting deflation. Hey, it's a contrarian take. And here's the thing about like the difference between Cathie Wood and Robert Kiyosaki.
Contrarian take.
It is. Everyone's predicting inflation right now, or like higher inflation, and she's saying deflation. Here's the difference, though. She offers contrarian takes that are sometimes right. A guy like Kiyosaki offers like ridiculous takes that are never right. That's
well,
the
how
difference.
about this? She also happens to have made. Well, actually, I don't know about how much money she's made for investors. Yeah. But she's done very well. Her fund has done phenomenally well. She's actually responsible for other people's money. There are actually consequences for her actions, maybe not her words. She could say whatever she wants.
The funny thing is, so it was her versus Rob Arnott on the stage at Morningstar, and I read a few of the just updates, people tweeting about what they were saying. The funny thing is, most people in finance would rather believe Rob Arnott, who's been saying value is going to be coming back and destroy growth for the last 10 years, versus Cathie Wood, who's been right. So, like, a lot of the stuff she says, people don't agree with, but she's been right. And a lot of the stuff Rob Arnott says, people agree with, but he's been wrong, which is an interesting way of viewing the finance world. Like, a lot of people would rather be
I think this goes back to my thing
right
about
than make money.
Did you just... Is that a Ben Carlson quote? Just kidding.
I'm sure I stole that from... Yes.
No, do you want to be right or do you want to make money? I feel like JC says it all the time, but I don't think he's made that up. But this goes back to my point that...
No one in finance Twitter has made up a quote that's going to last forever. Everything we've taken is a form of a quote that's been said before.
Because it's kind of like everything is as old as money's as old as the hills. It's kind of like that.
Wait, did you come up with that?
I just did, just now.
That's
off
awesome.
the dome.
Jesse, I'm going to start calling you Jesse.
So the reason why, again, people that have been saying value is going to come back or saying things that are going to come back or saying things that haven't been worked out, they're not all of a sudden going to apologize and say, I was wrong. And here's what, like, it's just a matter of time.
Hey,
you're just going to
I'm only going to fall on the sword. You know what? Remember I said Exxon is the next GE. Oil hit $80 a barrel today. I was probably wrong on Exxon. I'm big. I'm willing to be the bigger man here. Hand up.
Yeah, I think you were wrong.
That's possible. I'll probably be screwed anyway. All right.
Wait,
we talked. I'll probably right eventually. Not wrong, just really. We did our Spaces last week, and someone on Spaces alerted us to. By the way, sorry, we keep doing them at random times. We want to do it at 4 p.m. Sometimes we can't do it, so it's just like it's kind of like your favorite indie band that does a secret show somewhere and then just texts you out like when it's going to happen. That's us on Spaces.
Keeping you on your toes.
Yeah. So someone alerted us to this, the fact that ESPN is seeking to license its brand to major sports betting companies for $3 billion over several years. I think they've been talking to DraftKings and some of these other big ones. This article from the Wall Street Journal says sports betting is on track to generate revenue about $4 billion in the U.S. in 2021. I tell you, as someone who is now...
Addicted.
80% of the way to being addicted to sports gambling, I totally get it. I don't know why ESPN wouldn't do this. So technically Disney, I think that's what a lot of people were worried about. It's like, well, Disney's getting into sports gambling, but with ESPN, it makes sense. Here's my problem. So my sports betting strategy, I'm the Charlie Ellis of sports bettors. I've decided I'm not betting on the winners anymore. I'm betting on the losers. So I'm putting all the worst teams every week, the Jets and the Lions and the Texans. Especially, I've made money on the Lions, the team I root for, 3 weeks in a row by putting them in teasers and betting against them to lose.
I've lost money on the Lions 2 out of 3 weeks.
Okay, so I'm just going to keep betting on the worst teams and putting them in teasers to bring their spreads down so they lose. And that's my strategy going forward.
It's a great strategy.
But here's
the
problem.
By the way, hold on. You texted me that you're going to keep doing that until it stops working. Just keep doing that. It's not going to stop working. You'll lose once or twice.
Yes,
you might even lose twice in a row.
Lose.
But if you stay the course and you ignore the noise and you stick through it, through the volatility and last the whole season,
but
betting against the Jets is a great strategy.
I'm not like an options trader. Like betting in crazy parlays, that's an options trader. Those are always going to lose. Almost. I mean, like you're going to hit one of those every few. Yeah, they are. But you're never going to win one.
Babe, I'm in it for the fun.
Okay. I'm in it for the fun too, but here's the problem with sports betting. It's an app on your phone that you can bet on. You constantly want to bet. Once you start winning, you want to bet more, which is like being at the casino. They want you to play more because then the odds go in their favor, not yours.
Well, the other problem is...
I know it's a little different, but...
I mean, if you bet... So what was the Sunday night game last week? It wasn't a great game. I can't remember. But you stay up all night. So
yes,
I almost do not bet Sunday night games intentionally because I don't want to stay up. I want to go to sleep.
I watched the whole Thursday night game with Carolina and the Texans. Maybe one of the worst games I've ever seen. But I bet
Unwatchable. Unwatchable, unless you bet on it. Right. Cuts both ways.
Yes, but I can see how sports gambling is going to be huge and get addicting. And that's why anytime you watch a sports podcast and they have to read those disclaimers, like they read them as fast as they can. Gambling problem, 1-800, like,
yeah. By the way, wait till you discover coffee.
Okay, it's never happening. All right, so speaking of parlays and options, Wall Street Journal, by one measure, options activities on track to surpass activity in the stock market for the first time ever. So
by
the
what
notional
measure?
value...
Hold on. By what measure?
I'm getting to it.
Okay.
You're a little feisty today. You are throwing it. Just bring it. I don't care. You're letting me have it here. This isn't even my opinion. This is a story in the Wall Street Journal.
Well, I'm correcting the Wall Street Journal by one measure. I want to know the measure.
Okay.
Tell me the measure.
The daily average notional value of traded single stock options has exceeded $432 billion compared to $404 billion of stock. So notional value.
So it's a bullshit measure, as I suspected.
Nine of the 10 most active call option trading days in history have taken place this year. By one measure, and I'm sure that they keep saying by one measure. It's obviously option stuff is hard to measure. By one measure, option trading by individual investors has risen fourfold over the past 5 years. And there's these charts that show the average daily volume going back to 1975 and how.
All right, so that's legit. I mean, listen, that's all you need to say.
So every time the Wall Street Journal writes a story, they find some individual investor who talks about how they're doing great. So this guy, Britt Keeler, a 40-year-old individual investor, says, "I'm hooked on options. You could lose it all really quickly, but you could hustle and kind of hit the jackpot." This guy bets on parlays.
There's like a theme of the show that we've been speaking about for years. Where do they find these people and how? Are there ads in the local newspaper?
Would it shock you if this isn't just like some writer coming up with names? Because the names are always kind of out there too. Like, you know, when the first time you saw Anchorman and the best part about it was all the different names of the characters, right? You're like, where do they come up with those names? Sometimes that feels like the Wall Street Journal to me. Obviously, they have people on speed dial. But do you think this is just because obviously everyone said, okay, 2020, everyone's bored gambling. This is going to go away. In 2021, there's been more options activity. Do you think this is just the new normal where this stuff is just elevated and people are realizing, this is what I need. I need the action. Did you just drink your whole water bottle in one sip?
No. It's like not functioning properly.
Okay, you went to town on that thing.
No, I just tried to take a regular sip, but it got like backlogged.
Okay. But is this something that's we're gonna look back on in years and see this big spike and come back down, or is this just kind of the new normal?
I don't think this goes away. You call it whether it's Robinhood or whatever. Like people don't get unaddicted to things.
That's a good way of thinking about it. Mark it down. That's the title of the show. People don't get unaddicted to things. This is why I'm never going to be able to delete the apps from my phone for sports betting.
Yeah, you're hooked. They've got their tentacles in you, and they're never letting go.
I did my first ever live bet on a game, and it's like, oh geez, once you go down that rabbit hole, there's a million different things to bet on.
Is there anything more fun than betting on Aaron Rodgers or Mahomes when they're down a touchdown too?
That's the thing. The Lions were beating the Packers, and I said to you, whoa, they're giving the Lions 7 points still. I should bet on the Lions. And then I thought, wait a minute, George Costanza this. No, the Lions are definitely going to lose in a painful fashion. Bet on the Packers, and I won.
There you go.
All right.
That's basically like options trading. It's leverage. All
right. So
right? In-game is leverage?
Yes, pretty much. So when I was in high school, my senior year of high school,
40 years ago.
Yeah. All the casinos in northern Michigan, this is before casinos were really big and prevalent everywhere, but they had casinos on the Indian reservations up there. And they changed the rules from the gambling age, legal age being 21 to 18. And so we would go on Friday nights to play blackjack. It was amazing.
It's amazing.
And it was kind of funny because the first time we went, they just assumed everyone who got in the door was 21, so they're serving everyone beer. Don't tell my parents I was 18 at the time. But on Friday nights we would go, and there would always be a huge line at the cashier. And we had a buddy who worked at the casino. And we said, why is there such a huge line in the cashiering line? And he said, oh, people get their paychecks on Friday. They bring them to the casino, cash them, and then play with that money to gamble. And it's
I
just
know
like,
where you're
oh,
going with this.
Jeez.
Is this a segue?
Yeah, you like that? Pretty smooth, huh?
I do. Very well done.
All right. See, we were not doing this in the early days of the podcast. We had terrible. Speaking of, so
Well, speaking of,
no, this is completely unrelated. Coinbase announced this week they're going to enable direct deposits into crypto. So you
I want to know how this works. So let's say that I get I do. Like everybody else, I get a direct deposit, still in fiat because I'm crazy like that. Let's say that I want 80% of my paycheck going to Chase. I'm not going to tell you the account number, but let's just say that I want to go into Chase, and I want 20% of it to be redirected into crypto to automatically purchase Dogecoin. Can you have multiple avenues on your paycheck?
It says they can put as much or as little of their paycheck at no fee as they want. So maybe
Guess the answer is yes.
My gambling one is a little. So I guess this is not much different than directing a percentage of your check to your 401k. But I think when people say, oh, pay me in crypto, that's what they think this means. When really it just means you're direct depositing. And I think the point was, people were complaining that it's too much of a hassle to move money in every time. And they just want to make it easier and automate it.
I understand. Listen, if you're dollar cost averaging into crypto anyway, then this just seems like an easier way to do it, no?
Yes. I think the worry from people was like, oh, pay me in crypto. That's what this means.
Well, that's Bitcoin can go to $300,000. You should not pay yourself in Bitcoin. I mean, This is your life you're talking, right? Like,
well, when I joined Ritholtz Wealth Management, I said, pay me in stocks. And they gave me a percentage in my 401k that every time I get paid in stock market cachet. Pretty good, right?
When you joined Ritholtz Wealth Management?
Yeah, that was my one negotiation tactic. I'm joking.
What do we buy for you, Ford? Hope you bought Tesla.
Tesla's in the stock market index. So is Ford. Yes.
When is Coinbase doing this?
I don't know. It's coming. But is this a roundabout way of them like opening bank accounts for people and then doing their lend program still? Is that what's going to happen?
Are they lending to people? No. Well, they backed away, by the way. They backed away from the SEC. Their earned product got turned off. Are they lending or no?
I don't think so.
There's a chart from Michael Sembelis and the team over at JP Morgan. They do great work, by the way. Just truly top notch. Eye on the market. Are you a subscriber?
I'm not. Should I be?
Wow. Yes.
I mean, I look at the guide to the markets every month.
No, this is like the team behind Guide to the Markets, but like actual content. It's
the guy behind the guy.
It's very, very, very strong.
Okay.
All right. There's a chart showing core CPI components. And the COVID basket, as not we predicted, but as pretty much everyone predicted, things like airline, a lot of the stuff that was jammed up, prices have come back down. They spiked, they came back down. That's the good news. The bad news is all the other stuff keeps going up. Thoughts?
Are you trying to take a victory lap now that you got
I'm
off
not.
the
I just want to talk. I
Yeah.
just want to talk.
Well, I mean, the supply shortage stuff is probably lasting longer than people thought. All the ship containers that keep showing in California being all backed up.
Joe and Tracy had a podcast today. They're doing an excellent job covering all the shortage stuff, talking about the railroads, and it really is like the knee bone's connected to the hip bone, or wherever the knee bone's connected to. Not the hip bone.
Yeah.
Is there a knee bone? I don't know. Whatever. It's all interconnected, and you block one route, and things go kablooey. And basically, there's blockages everywhere.
Yes, it is surprising that it's lasted this long. I guess it does show, like, the internet can't fix everything. There's the importance of the physical nature of everything, moving stuff around, still matters quite a bit, right? It's like you can't.
The
just buy
IRL world.
Yes,
the IRL world.
Guess
so
what? Web3 is not going to help people move their ships around. By the way,
not yet. What?
The whole Web3 thing kind of annoys me. I'm just going to put it out there on both sides. On one side, you have people saying, this is dumb, it's just digital, whatever. And on the other side, you have people saying, it's inevitable, Web3 is going to happen. I don't know. I don't like either take. I'm in the middle on this one. Both sides annoy me.
You have to choose.
I'm just gonna. I told you, I'm
No,
out of the metaverse. I'm
Oh
out
yeah,
of the
you're out
metaverse.
of the metaverse.
But
Okay, fine. We don't want you.
Here's the thing.
You're not
Yo,
wanted.
you're on it. But here's the thing. It's like there's people who love seafood. They love oysters. I'm not a big seafood fan, but it doesn't bother me that other people like seafood. That's my stance on the metaverse. Good for you if you want to buy like a digital hat. Cool. You put it on your character. Good for you. It's just not for me. But I don't I don't look down on you for doing that. I'm happy for you. If you like buying digital goods, go for it.
All right, but that's just like that's such a cop out. It's so lame. I don't like what's going on both sides. What are you, like a gym teacher? You're trying to calm everyone down?
Pretty much, yeah. I'm not a big fan of the extremes. I don't like either extreme on most issues.
Okay.
I'm the gray. I'm not the black or the white, I'm the gray. That's me.
That is you. All right, FedEx gave a warning. They cut their financial outlook. Labor shortages caused expenses to soar. So the stock got killed, just absolutely annihilated. I think it's in a 37% drawdown. The tight labor market added $450 million to costs. $450 million.
If we're thinking through, by the way, when you think about like when the pandemic started, doesn't it feel
let's do it. Let's do a little exercise. Let's think through this. Go ahead.
But doesn't it always feel like 6 or 7 months ago? Even though we've been in this for well over a year and a half now. Like in my mind, it's always like, oh, the pandemic started 6 or 7 months ago. It's kind of like how 2005 always feels like it's 10 years ago when it's really not anymore.
The election was not even a year ago. That feels like 7 years ago.
That's true.
But go ahead.
I'm thinking through stuff that from the pandemic that's still going on that is a little surprising. So the supply shortage stuff lasting this long and still getting worse is a little surprising to me that like they haven't been able to figure it out yet, break those bottlenecks. The fact that COVID is still here in such a bad way in that we're still having a hard time getting so many people vaccinated is surprising to me. I kind of thought, okay, we got the vaccine and we're kind of done with this thing. This has lasted way longer than I thought it would be. That is now seeing why it's happened and the fact that it's politicized makes sense, but the fact that it's still going on has surprised me. The labor shortage stuff, I think that has legs. We've talked about this, about daycare and teachers and buses and all this stuff.
So if you think labor shortage has legs, how could you think that inflation is going to just go right back down?
But if all these higher wages for 15, 17, 18, 20 bucks an hour aren't getting people off their butt to take these jobs, what if a lot of people just have reassessed their life and don't want these jobs anymore? Like what
when
if
I
this
was
is
in
a
team
huge...
transitory, when I was in team transitory, I don't want to use when, because I still think some of this stuff will be resolved. I don't think like it's going to spiral out of control. We're going to have 4, 5, 6% inflation next year. But the one thing that I did say, I hope over and over, was I will change my mind on wages. To me, that's the big thing, because all of the hotel, car stuff, airlines, eventually.
Does it make a big enough difference if all the wages are rising fastest on the low end? Does that really impact inflation that much if the wages are rising where people have been held back for years now and they have deserved more money for a long time now?
Well, yes, if then the employers, FedEx and et al., are going to pass it through to consumers. So he said, the COO said, the impact of constrained labor markets remains the biggest issue facing our business. So here's this. Sorting hub in Portland, Oregon had 65% of the workers needed to handle the normal number of packages. Only 65%. There's another reason for why supply chain issues just all over the place. Across its divisions, salaries and employee benefits expenses in the latest quarter was 13%, including 27% in its ground division. And here's the inflation. The company on Monday said that it would raise its rates an average of 5.9% early next year, the highest annual increase it or UPS has implemented in 8 years.
How much do you think FedEx got paid to allow their plane to crash in Castaway? Had to be a lot, right?
Bad marketing?
Right? Their plane crashed. But he still delivered the package at the end, so maybe
I
that
see
helped.
I see you with the hard pivot away from inflation. I see what you did there.
I don't know what to say. Okay, speaking of inflation, see, that's another transition, Michael. So Bill McBride from Calculated Risk started a Substack, and it's all housing market
really?
stuff. So he took all, yeah, you didn't know this? His Calculated Risk newsletter. So everything he does on Substack is now just housing related. So he was saying that from the peak of the bubble, if you just looked at absolute numbers, mortgage debt is up $573 billion. So that sounds bad, right? Absolute numbers, you look at the mortgage housing bubble, debt is higher now than it was then. But as a percentage of GDP, it's less than 50%, whereas at the peak, it was over 73% of GDP. The point is, homeowners have way more equity now in their home, and interest rates are lower. So this is why, like, you can't look at absolute numbers in this stuff and how people are doing much better than you think. Money with their house, right? So, like, this is why it's so hard for people to wrap their head around, geez, we just had the highest ever gain in a 12-month period for housing market, and people are still doing better than ever. Obviously, the housing prices rising is helping that.
I feel like people aren't using mortgage debt as a boogeyman, thankfully, right? Are they?
I think people who use boogeymen always use debt as their boogeyman.
What's the biggest boogeyman in terms of this sort of, right now? I'll throw out M1.
The money supply? Yes.
Yeah.
People not understanding what it means, and that's probably a good one. Here's a good one from George Perks. How much does the median home in the United States, take all the houses, median value, how much do you need for a down payment for a first-time buyer? This surprised me. Did you see this? Are you cheating? Did you look at the number?
I did. I'm looking away, though.
Okay.
But the median home price is $350,000.
Yeah, median existing home price is $350,000. We've talked about low rates being a boon for home buyers for a long time, and every time we say this, someone says, whoa, what about down payment? The median down payment needed for a minimum down payment is $12,200. That doesn't sound too taxing to me for a lot of people. If you're really going to put some money into a home and you want to have something down, that doesn't sound too bad to me.
I completely agree with you. I have a really good counterpoint, though.
Bring it.
The first-time home buyer represented in the latest report 19% of all sales. Normally, it's the average has been around 40%. That is a gigantic drop-off. So I agree with you. The data point you just gave is compelling. Like, it doesn't sound too onerous, but the number of home buyers, first-time home buyers, suggests that it is.
Okay. And part of that obviously is based on where you live, right? If you live in a high cost of living area and you're a first-time home buyer, you're probably not going to do it in a lot of places right now. You can't, unless you have rich parents or, right?
But so like in like my neighborhood, for example, has priced out a lot of people that are just like us or just like me, first-time home buyers. Like, I'm very lucky that I bought my house. I don't know. I'm looking at my calendar. What year did I buy my house? 2018? Because prices are up 30% since. And so a lot of people can't do it. Like, literally cannot get into a house. So I think a lot of stuff gets lost in the median. I agree that trying to use median to say that housing is a bubble, nobody can get in, is disingenuous because people can get in. But yeah, you're right. It depends on where you live. Like, that's really it. Where do you live?
Yeah, if you're
some people are getting totally boned, and some people are okay.
Yeah, if you're in a flyover state like me, it's much easier to buy a home. If you're a coastal elitist like you, it's much harder.
Right.
Fair? Here's another one that pairs nicely with the mortgage data. Federal Reserve said on Thursday the net worth of U.S. households was $134 trillion in the second quarter. That's the highest it's ever been. That's well over the fourth quarter of 2019 when it was $110 trillion. People have gotten richer during a pandemic, which is another surprising thing. They took a look at money in the bank. Cash and cash equivalent holdings since 2017 is up 50% almost. More cash on the sidelines. And basically they're saying because of the pandemic, a lot of people are leaving it there and a little concerned, and that cash is going to stay on the sidelines. This is one of the, last week we talked about the increase in bond fund flows being crazy. I think this is another data point like that you have these crazy extremes in the market of speculation on one end and cash hoarding on the other. It's a very bizarre market.
It is weird. Right? There's enough data points out there that you can put together any story that you want and make it sound reasonable without showing a lot of the other data.
Here's
right?
another one. So Eric Balchunas, who we like to mention.
All
yes.
Right.
No, I agree. Yes. I'm sidling with your point here. he tweeted this morning that VOO, which is the S&P 500 ETF for Vanguard, just broke the record today. It's September 28th. Broke the record today for largest inflows for an ETF ever in a year.
Wow.
There's still 3 months to go this year, and it's already broken it. So this is another one of, well, now everyone's an active trader, but wait, money is flowing into Vanguard hand over fist still. And so you have all these competing ideas going on, which I guess is what makes a market, right? You have crazy options volume, but you also have all this money going into Vanguard. You have
And we
tons
also
of
have all
cash
of
on
this
the
money-
sideline.
And all this money going into fixed income that we discussed last week. And at the end of the day, as the saying goes, it's all the Fed's fault.
But that's the whole thing is there's just too much money. There's too much money in everything, in housing, in bank accounts, in stocks and bonds, in startups, in everything. So if you're trying to bet against this,
Josh wrote a great piece about this. There's just too much money, and I kind of do feel like that's just like the bottom line. There is too much money. It is clearly
Robert Kiyosaki has too much money, right?
Yeah, clearly. It is clearly affecting everything, right? Everything. People are dying for yields. There is so much money.
Yes, people were unironically tweeting today that they're worried that the 10-year Treasury yield is rising to 1.5%.
Right.
Right. Like this is worrisome. Treasury yields are at 1.5%.
Right. Too hot.
Yes, it's bizarre. Okay, listener email. It may be of interest that here in Brazil, where I live, almost everything you buy at a store can be purchased in monthly installments, even T-shirts. Sometimes you even get a slight discount if you pay what's called a vista, which means all at once. All right, I went to buy a printer for $100, and when I paid a vista, everyone in the store was surprised that I would do this. You see, people here refer to their salary as their monthly salary. So the States, most people walk around thinking I make X per year. Here they carry their monthly salary in their head. So he's saying buy now, pay later is already enormous in Brazil. You and I have been talking about this for a while. I think our first initial thing was, we don't get this. How is this a business? We evolved. We said we were wrong. We understand why it's a business because credit cards charge fees. Merchants want to understand their buyers better. They have their bank account. But that morphed into us being, oh no, this is kind of going to be worrisome because obviously, a lot of people will say, well, what's the difference between buy now, pay later and a credit card? With a credit card, you can negotiate your payments lower if you get in trouble financially. Obviously, you're paying higher interest rates, and with a buy now, pay later, you're paying none. But I don't see how you can discharge the debt on a buy now, pay later easily when they have your bank account information.
What if you stop paying your Peloton? Do they come and get it? Do they repossess it?
But how do you stop payment? They have your bank account. Do you close your bank account?
Yeah, I don't know.
Do you have to tell them I can't pay anymore?
What if people lose track of how much money they owe?
That's my worry.
Is there like an app that aggregates your Afterpay, Klarna, Affirm transactions into one hub where you could see how much money you actually owe?
And then what happens when Macy's starts doing this on their own and Amazon and Walmart? I'm worried. Obviously, there's always going to be people who mess up with their money. But if you do this 12 times, and it's different if you do it once because there's a big ticket item you want or need, like furniture for your house or whatever, when you move in, and you plan for that a little. But if you do this with a bunch of different things, it's going to screw with your finances in the future. You're spending your future money now. 5
years from now, Affirm is the biggest lender in the United States. They can't pay their debts. Ben says no big deal. Fed comes to bail them out.
So Walmart tried to have like their own credit card arm, and they realized that the bank they were working with wasn't approving enough people. And so Affirm came in and said, hey, we'll approve all these people. We don't care. And that's my worry, is that this is going to be like a little crazy subprime thing where people are going to get their finances really screwed up because they just do installment payments for everything and not realize they're spending their future budget right now.
Right.
They're locking themselves into it. All right. I got wrecked by the listeners last week for saying that I don't use Apple Pay.
And rightfully so. No, it wasn't that you don't use Apple Pay. It was that you were asking for Apple Pay when Apple Pay exists. Like, I mean, boom roasted.
No. I was talking about my driver's license too. It was more than the credit cards.
Just take the
last week, Apple. Yeah, I lost that one. Apple announced that it is working with several states across the country, which will roll out the ability for residents to seamlessly and securely add their driver's license or state ID to their wallet on their iPhone or Apple Watch. Arizona, Georgia, Connecticut, Iowa, Kentucky, Maryland, Oklahoma, and Utah. Great idea. But here's the problem. How are young kids supposed to use a fake ID on their Apple Wallet? It's going to be harder to buy booze.
Have you heard of Web3?
True. You don't need to buy booze anymore. You just drink it on the web.
Come on. No. Use the metaverse to create a fake ID. Hello?
Oh, okay.
Earth to Ben.
Oh, this is the problem though. If everything is going to be an NFT in the future, how are people supposed to buy beer before they turn 21? Because everything is going to be on the blockchain verified. The NFTs are going to ruin high school parties. You still a big fan of this now? You don't condone underage drinking?
I do not.
Okay. Yeah, I'm kidding.
We spoke about how the child care system is broken. We got an email. I run a nonprofit preschool in California. Payroll, including benefits, is 68% of our gross revenue, including fundraising. You were right about the ratios requiring a lot of staff. Big picture, we lose money on the infant program, break even on the toddlers, and the preschool pays for the whole thing. There is no fix that capitalism can provide. It's not a sustainable, profitable business, period. And perhaps it shouldn't be. I agree 100% that government should extend care into younger ages, and I also think companies have a role to play here with longer leave and subsidies for childcare. This is, I mean, I think this is cut and dry. I really do. This is not sustainable.
And to the mean old man who sends us an email every time we talk about daycare, please stop sending emails.
You're blocked. How about that? You're blocked. You can keep on emailing us. You're blocked. We're not going to see it anymore. We got another email. Talk about filling out paperwork. I complained about going to the doctor last week and filling out paperwork. And speaking of, you ever hear of a little thing called bedside manners? This doctor told me that he was surprised to learn that I was 36 when he saw my x-ray because he thought I was 20 years older. And that really upset me.
Wait, this is when you sneezed and blew out your back?
Yeah. I almost cried because I was like, it hit me that like I'm like my own mortality type of thing. I have 2 young kids. I can't be like that messed up. Like that's, what am I going to do? So then the next day I told him, I was like, just FYI, like that, is it really that bad? And he goes, because I told him I was upset. He goes, well, I probably exaggerated. Let me show you the x-ray. And I said, why would you exaggerate? This is not like a story you're telling to your friends. You don't exaggerate somebody's health problems. What's wrong with you? Anyway, my back feels better, but that pissed me off. So
it's like Robert Kiyosaki is your doctor.
Yeah, he's predicting a crash in my back. Great. Filling out paperwork. This company just came public via SPAC. It's called ShareCare. Not a recommendation, of course, but it's trying to build a platform app that connects to various parts of the health medical world that are currently fragmented. They want to be the one-stop shop for health providers, employers, and consumers. Good.
I feel like this is an idea. This is an idea that people have been kicking around for years and years now, though, and it hasn't happened because all these places don't communicate with one another.
Well, ShareCare. The time is now. It's enough. And I also learned my handwriting was always terrible. I cannot literally write anymore.
When I write a check, I feel like my hand's gonna fall off. What's the point of writing?
It's embarrassing.
Can you believe that we had to learn cursive when we were younger?
What a joke. What a joke.
What a waste of time that was, right?
We should have learned coding or budgeting or something. All right. Award shows. I know this has like been trending down for a long time. Who was talking about it? Maybe it was Linton. I can't remember. But the Academy Awards just crashed. Nobody gives a shit about the Emmys, the Grammys, the Golden Globes. Nobody watched the Olympics. We are so done with everything.
I think it's not that people are done with it. It's that we didn't have enough choice before. We have way more choice now. You can watch YouTube, listen to podcasts. You can watch streaming shows. There's a million cable channels. I think part of it is just there's more choice now. And back in the day, there wasn't as much choice.
Yeah, but I don't know. There's been choice for a while. I feel like it's been trending down with the opening of choices, with the more options. It's been trending lower, but
it was already moving lower.
It crashed. And I don't think that's because we have more streaming today. I just think something happened. I don't know. Maybe COVID. Maybe.
So here's something else that we don't have anymore. We took our kids to the homecoming football game on Friday night because they had a parade, and each of the classes, the freshmen, sophomores, juniors, seniors, each had a float. And then they threw candy out to the kids, and all the sports teams walked to the parade before the homecoming game. And here's what I'm thinking. The floats were 1960s, 70s, 80s, 90s, right? Each of those a pretty distinct era in terms of music or fashion. We don't have that in the 2000s. You couldn't make you couldn't have a 2000s party or a 2010s party because there is no distinct fashion or style that really sticks out. Like, I don't know, clothes were a little baggier in the 2000s and now they're slimmer. But I don't think you could have in college, we would have a 1980s party, and everyone would dress up, and you knew it was an 80s party. You couldn't in 20 years have a 2000s party or 2010s party.
And you could do a 90s party. It would be grunge. Did you say that already?
Yeah, well, I'm saying, 90s, all those decades pre-2000.
What would it be for the 2000s?
I honestly, there isn't it. That's what I'm saying. We don't, this whole century, we don't have a distinct, I think people just dress better now than they did in the past. There's no distinct to out there styles. I mean, obviously some individuals, but there's no overarching theme. So I don't think they're going to be able to do this anymore. There's going to be no 2000s or 2010s floats in the future.
Capris, white tank tops. Oh, this is all for women. Bedazzled jeans. Skinny scarves. Oh, yeah, but that's not a 2000. Oh, I think you're right. It's a good call.
There isn't much. Okay. Why don't we skip listener questions this week since we're doing a full listener questions?
Oh, trucker hats. Remember that?
Okay.
That was dumb.
You can do that.
You definitely never wore a
Von
trucker
Dutch.
hat.
Yeah, not really.
I didn't.
Von
Whoa,
Dutch,
whoa,
no.
hold on. I definitely didn't wear a trucker hat, but you just said not really. So it sounds like you did wear one. You bought one. You never wore it.
No, I definitely was not a Von Dutch guy for sure. No way.
Oh, I got another one. Speaking of hats, fedoras.
That's not a bad one.
Did you wear fedoras?
Fedoras had no. Seriously? No.
I was way out of fedoras. I got one more. A lot of headgear. You can see I'm a hat guy. I never wore any of these, by the way. I'm 0 for 3. No fedoras, no trucker hats, no visors. Remember visors, the John Gruden thing?
That's for football coaches, though. That's not.
You wore a visor. Definitely big visor guy.
No way. Remember people used to wear visors upside down? No. No way. I would never wear a visor. Well, you couldn't wear one because you couldn't wear a visor because you get a nasty sunburn. Right? So you'd have a weird.